We fully expect the next QE to be launched in the near future, sending the dollar into its next and possibly final reserve currency death spiral as the printer goes burr.
Go for it! Flush them hard, boys!
Hey guys, Rafi here from the Endgame Investor, and today we're going to talk about Zerohedge, calling the endgame almost explicitly. It is becoming obvious that the mainstream financial media is starting to call for the end of quantitative tightening, the end of the shrinkage of the balance sheet, to move into the next phase of quantitative easing and money printing. This began last week with Bloomberg reporting on it, and today we have Wall Street Journal reporting on the same thing. Monetary tightening is coming to an end, and there is going to be something happening in the plumbing very soon that will force a reversal, just like it did in September 2019. And yes, I do believe that the end game, as you'll see at the end of the Zerohedge article, is probably going to happen this year after some calamity occurs in the plumbing. And the plumbing is being mentioned a lot these days, especially in the mainstream financial media. And in celebration of this eventuality of the hopeful end game this year in 2024, this video is brought to you by the Dirty Man Safe. The Dirty Man Safe, is it right for you? If you like hiding things and you like gold and silver and you don't trust anyone to store it for you safely, then a Dirty Man Safe may be right for you, especially if you have premonitions of IRS agents showing up at your property with metal detectors.
Wonder what happens if I turn it on and point them at each other. Oh my God!
I'm here to tell you that those premonitions are just fear. The last place they will look for wealth is in people's backyards because most of America is armed and most IRS agents are stupid and cowards.
I'm actually supposed to be getting out of prison today, sir.
You're in the wrong line, dumbass. Over there.
I'm sorry, I am being a big dumbass.
Hey, let this dumbass through.
If you would like a Dirty Man Safe, there are two ways to do it. You can either sign up to be a paid subscriber on the Endgame Investor on Substack, where you will enter into a raffle to win a free Dirty Man Safe at my expense. Or you can just buy a Dirty Man Safe at dirtymansafe.com by using the code ENDGAME10 at checkout for 10% off. If you want to support this channel, that is a great way to do it. My goal is to protect people's stashes so that the real liberty-loving people in this country and in the world have the money by the end game and therefore have the resources and wherewithal to reorganize the economy from the bottom up and create a new world. But for that, you'll need your stashes to be safe. And finally, you can also sign up to be a founding member of the Substack, where you will get free access to my Patreon at patreon.com/endgameinvestor, which you can also subscribe to for as little as $3 a month to get weekly biblical commentary from the ancient Hebrew sources on monetary, economic, and government topics. To see that this is not the first time that we have gone through this process. We have done it before, just not on this scale, and we will get through this one as well. And I'm here to hold your hand through this process using ancient wisdom as a crutch. So we have this article from the Wall Street Journal published on January 15th. That's yesterday as I'm recording this. Fed tiptoes toward dialing back key channel of monetary tightening. By slowing the pace at which its balance sheet shrinks, the central bank aims to prevent a messy disruption to the financial system. Here we see a nice picture of the Mariner Eccles building with a crane on top of it and cloudy skies. This is supposed to be ominous for something that's about to happen in the monetary system, and I believe it's true. It's going to happen. Exactly what's going to happen, we'll see in probably a few weeks, maybe a few months. First paragraph here, though the Federal Reserve stopped raising interest rates last summer, it is quietly tightening monetary policy through another channel, shrinking its $7.7 trillion holdings of bonds and other assets by around $80 billion a month. Now, that too may change. Fed officials are to start deliberations on slowing, though not ending, the so-called quantitative tightening as soon as their policy meeting this month. And here is the reason why in this highlighted paragraph here. Policymakers have several reasons to consider slowing runoff. First, the Fed is shrinking its Treasury holdings by $60 billion a month, twice as fast as it did 5 years ago. Continuing to run at this rate raises the risk that the Fed drains reserves so quickly that money market rates jump as banks struggle to redistribute a dwindling supply of reserves. And here is the math behind this. Second, there are signs that the cash surplus in money markets is rapidly diminishing. The Fed allows money market firms and others to park extra cash that would otherwise end up in reserves in an overnight reverse repurchase facility. That's the reverse repo thing that I talk about all the time. The facility has shrunk by around $1 trillion since late August to around $680 billion. Well, now it's $600 billion, so he's $80 billion off there. Logan endorsed, that's Lori Logan of the Federal Reserve Bank of something or other. Logan endorsed slowing runoff once that facility is nearly drained of cash, because after that, forecasting demand for bank reserves will be more uncertain. So this chart is pretty important. You have here the total number of reserves plus reverse repos in the system. You can see here that as the reverse repos fall down, this little thing over here, you see that reserves have also fallen, but not as much. And so what was once reverse repos, what was once sterile cash that was not being used for anything other than adding more interest from the Federal Reserve, this cash is then spent by the Treasury into the banking system, joining this cash over here, which is bank reserves. We're going to go into more of that in the next chart. Here's a weird quote that I don't really understand why it's such a surprise. It says here, this is a quote from somebody. It has been a surprise to everyone that overnight reverse repurchase balances, reverse repo balances have fallen this quickly and that reserves have actually increased over this period, said Brian Sack, who managed the balance sheet as a senior executive at New York Fed from 2009 to 2012. Well, why is it that surprising? Well, I mean, if you're going to take money out of the reverse repo and you're going to spend it into the economy through treasury bills that the government uses to plug up its deficit and hand out money to banks when it spends money, why wouldn't they end up in reserves? That doesn't make any sense. Why is it a surprise? If we look at this chart over here, we can see the overlay between bank reserves in the blue and reverse repos in the red. As reverse repos have plummeted over here, right, where they were at, what's that number? This is 3.2 trillion in reserves. This is 2.375 trillion in March 2023, and now we're at 600 billion. So we're down like 1.7, $1.6 trillion since March 2023 in reverse repos. And through that time, bank reserves, which are actually in the system, have only risen from 3 trillion to 3.4 trillion. So $400 billion off of about $1.6 trillion in a fall in reverse repos. So a lot of this money has just disappeared. And that is either through defaults or debt repayment. But we can see here what the problem is. If we take a closer look at this chart, you can see here that the previous QT, where the blue line falls in the middle there, what happens when there's no more reverse repos in the red is that reserves start to fall. And they fell to about $2 trillion, at which point we had a repo crisis, and then they had to expand the balance sheet again. So what do you think is going to happen when the final $600 billion bleeds out of the reverse repo? You can see it. Reverse repos fall, reserves climb. What happens when there are no more reverse repos? Reserves fall, and you end up with a monetary clog, followed by the final printing round.
I see it. I see it.
The point is, once these reverse repos stop falling because there are no more, what else is going to feed the reserves? If you have interest rates at 5.45% or whatever it is, then you can't have a fractional reserve system loaning money into existence. And so reserves fall and fall and fall. That's why they're only up about $400 billion, even though $1.6 trillion of reverse repo money has poured into the banking system since then. That's because debt is being paid down and the money supply is shrinking. Now, I'm going to take this into another article that was sent to me the other day by a subscriber. This is using rising silver lease rates. What is it telling us? Now, this article was written by Bob Coleman, who has been in the silver industry, the precious metals industry, for many, many years. You might be familiar with him. I don't agree with everything he says, but I found this article very interesting. This paragraph is the one that I wanted to relate to you. It says here, with all this said, I'm going to lay out a forecast that will blow many away. Well, blow me away, Bob. I'm ready for it. As we saw in 2021, the retail industry cannot make the price of silver break out to all-time highs. Due to the nature of transactions surrounding silver via collateralization, financialization, leasing loans, hedging margin, leverage swaps, and other trading and industry practices, Silver needs disruption in true supply to pressure these activities and force transactions to unwind that were structured to protect against volatility. What Bob Coleman is essentially saying here is that the retail silver stackers cannot really move the silver supply because we're an insignificant amount of the market, at least right now. And so what an earthquake in the reserves in the bank system will do is unwind a lot of these silver hedges in whatever structure they're being used to mitigate the silver price or whatever it is. That's the big moves that will hit the silver price. And we saw this in 2011 when the rise in the spot price of silver up to $50 was almost entirely a derivative based move. It was in the paper silver markets because what we saw was the spot price was rising, but premiums went negative, which meant that it was actually cheaper to buy a silver coin, minus shipping, of course, than it was to buy a share of SLV or a silver futures. But what Bob Coleman does not note here is that monetary demand can get sparked very, very quickly. When the public no longer trusts the dollar as a gold derivative, they have no choice but to move to silver. So the retail stackers can move from a very, very minute part of the market to basically everyone in the world overnight as we see a monetary panic. And that's what could happen at the turn from QT to QE whenever there is a rumbling in the monetary plumbing, which the mainstream media is now predicting is going to happen.
Oh my God.
And what we said at the beginning is that Zerohedge is now calling for an endgame on this final pivot, which will probably manifest itself as some kind of trouble in the sewer system of the Mariner Eccles building, not the actual one where they have toilets, but the really much bigger one where they manage all the transactions in the overnight interest rate markets between humongous banks. This is what Zerohedge says in its article on this topic. Bottom line, after several years of tightening, 2024 is when the liquidity floodgates, reopen. And not only does the Fed start to cut rates aggressively, but with QT tapering, we fully expect the next QE to be launched in the near future, sending the dollar into its next and possibly final reserve currency death spiral as the printer goes burr. Well, there you have it, folks. Mass hysteria.
Human sacrifice, dogs and cats living together, mass hysteria.
Zerohedge calling for the endgame with the final pivot. It's going to happen whenever there is some kind of rumbling in the monetary sewers. We should watch out for it coming in the next few weeks. The reverse repos are down to $600 billion. We are almost there. And because we are almost there, now is a great time to buy a Dirty Man safe or enter into a raffle to win one for free by signing up as a paid subscriber to the Endgame Investor at Substack. Link in the description below. Use code ENDGAME10 at checkout.